Good evening, everybody. Casper here. The market has closed for today, excuse me. And I was just scrolling through the ratios and I came to the uranium sector and I decided to do a quick video because I think many things are happening. So in this video, we will only look at the ratios with a uranium perspective. Let's start with the URNM divided by the uranium spot price. Just want to show you that it has broken out. There it is. It has broken out from this falling golden trend line right there. Connection, tag there, bit of a pullback, and then boom, inverted head and shoulders. Beautiful, beautiful, beautiful. And now the uranium miners or the URNM is outperforming the spot price itself. Exactly what we want to see, just like we saw over here in the previous run-up for the leg 1 in this bull market. So leg 3 should start somewhere here, and it is starting right here. So there it is. Similar, URA divided by the uranium spot price again, clearing that neckline here. You have it right there, inverted head and shoulders, back to the old uranium bull market where it started. And yeah, looks beautiful. This is stunning. I like what I see, and so should you. The URA divided by the NASDAQ or the NDX. Again, this is a major resistance. And to me, it looks like some sort of cup and handle play here. To some degree, it's quite skewed, I know, but still, we are beginning to outperform again here. And we are above this pivot low all the way across. We have this support and resistance level, and we are back above. So URA are in charge right now against the NASDAQ. Beautiful. And again, if you can get all the way back up here, then you could argue that you have a cup and handle or an inverted head and shoulders, depending on how you see it. Beautiful. What's also very nice is actually the URA divided by the SPY. So you can see here that right now we are breaking out of this golden parallel support channel, trend lines, whatever you want to call it. And we have an internal here and a parallel external here. Beautiful. And now we are getting above here. Again, it's very early, I know. We haven't made a higher yet. However, this is a start for sure. And yeah, you can see how much we have to go. I'm not saying that we go all the way, but you can clearly see that the momentum is in favor of uranium against the SPX. Beautiful. Here we have, I'm just going to remove this one, it's just noisy, I guess. Here we have URA divided by the CRB, and it's a very difficult chart to do, but I only have a few lines, and that's the one going across here at 0.084. You can see every time there are support, resistance. Again, resistance, wick to the top, resistance, wick, and now we are finally breaking through, and we are not seeing a wick on the weekly. That's very nice to see uranium miners, the URA, outperforming the overall commodities. Beautiful. This is URA divided by the XLE, so the overall energy, oil and gas sector. You have it here. That's the golden trend line to look for. 3 touches, and today, well, this week, excuse me, we are breaking out of that bad boy. Beautiful. Again, we have an inverted head and shoulders right here. There it is. It pits here, and I would assume that when we break that one, that's the next resistance, and then we have the low here, and there. So getting above 0.29, give or take, taking out that neckline and the horizontal support and resistance, then beautiful. But this is the start for me, taking that big bad boy out there for URA. All right, what's also nice is URA divided by Bitcoin. Yeah, why Bitcoin? As I mentioned a few times before, Bitcoin has been the best performing asset more or less for the past 13 years. And what I'm looking at here right now is this trend line here. You can see all the connections almost touching here. There you have the retest and then a breakdown and a test again. And we are right now getting back above that long-term horizontal level. And you have the golden coming down from there. And we are negating this bear flag, the potential bear flag that we could have made here. And we are back above. So now we only need to actually break that golden trend line here in order to have URA to outperform Bitcoin. That's music to my ears, at least. XLE divided by SPX. I know it's not uranium, but it's the overall energy sector XLE. Still, this was the bull flag into that long-term orange support, golden trend line, and we're just trending higher here really, and we're just grinding to the upside. And my target for the first is the triangle fill right there. So the overall energy sector is right now outperforming SPX. Here we have it inverted, the XLE divided by URNM. So you want this one to go down in order to have URNM outperform the overall energy sector. And this white line that we drew when we broke out here, and now we're just slowly following that line perfectly. This was the key moment, a breakdown into that blue wedge here, and then just a nice rollover as sketched when we broke it here. So again, also zooming in, which is very important. We have the low here at 2.3, let's call it 2.3 again here, and now we're breaking down from that major horizontal level right here. Again, URNM to outperform the XLE. Stunning. Last but not least, there are more ratios, but this is what I have had here for the video, very short. This is the URA, where you take the energy cost of the oil divided by the uranium spot price. I want to show this one. It's a long term, going back 13 years. Big inverted head and shoulders, and we are trying to break that 20 ratio level zone between 19 and 20. When this happens, it means that the uranium or URA is outperforming the input cost divided by the uranium spot price, meaning the uranium miners is about to earn a heck of a lot of money here compared to the past 10 years. And the measured move is, yeah, we can do that easily. Let's do it. Let's do it. Price range, you have the bottom here to the neckline or to the next zone, whatever you want to call it. There it is. So actually we are pointing to all-time highs over here back in 2011. That's not all-time highs, but the all-time highs for the URA at least, and the Fukushima gaps. So that's actually aligns up perfectly. So again, overall, the uranium market measured against not the US dollar, but against big indices like the SPY, the uranium spot price. We could have done it against gold and silver as well, but we could do that in a different video. Just a quick video here. Uranium looks very nice. Again, short term, I think it's getting a bit stretched. It doesn't matter at all because the weekly and the monthly time frames are in fully charged right now. So every dip, that you see on the daily chart is a buying opportunity in my view, from where we are right now. I hope you liked it. If you do, thumbs up, subscription, all that good stuff. All that good stuff. And we will see you in the next one, guys. Cheers.